So now we're going to move into the analysis of the dollar, gold, and Bitcoin. This is going to be pretty fascinating because these things have had some big moves today, and I did some analysis, a little bit of revisions that our members are going to see as they get our charts over the weekend, and just some great information when you look at this. So we're going to switch over now, and remember, we are cycle analysts, and I'll do what I can to help you understand what that looks like. So this on the bottom are the cycle brackets. You see there's a lot of them in here, and I'll explain to you what they mean, but essentially they are guides. And what you can see is that you see this big cycle right over here, and it was bullish, right? It finished way above where it started. We call that a positive configuration. And the next one, the same thing. You see that? Just beautiful upward moves here in the dollar as it was really strong during that period. We're looking at a 10-year chart, and each of these major cycles is 183 weeks long. But what we want to look at now is right over here. So I'm zooming in. Yeah, messy chart, ton of information on here, but what you can see now are the smaller cycles. You see this gray cycle right over here and here and here. And then there was this oddball where the markets collapsed in March. The dollar was reflecting that, and it made this huge diamond. And we kept calling this diamond the top. We really thought that it was. And now where we are, let's take a close look right over here. Well, you can see this minor cycle right over here. It made its low pretty much right on time. You see the low here right on time, and the low here right on time. And when this rally came into the sell zone, we said it's really likely to fail. This one here and this one right over here, and that's what happened. And we looked for a big decline. Now, this is important analysis. For the next month or so, we see the likelihood that there is going to be a decline still. Now, gold soared to the upside, and I'm going to show you that in the next chart. And what this says is that, well, there's a window open in the next month for gold and silver and even Bitcoin, which is exploding, and are inversely correlated to move to the upside. And then probably after that, there's some minor rally over here. But what we're looking for is a major decline projected out into August to October 2021. So that's just these the bigger cycle right over here. If I point right over here at it, it will tell me the date of the next low. That's September of 21. This one aligns up to September of 21. This one aligns up to September of 21. All of those say that when there are minor rallies over here, you're likely to move to the downside. That really points to gold doing really well to September of 2021. So we're looking in here for the next month to be on the downside, as you could see pretty clearly right over there, and then getting some modest rallies. So you probably get a continued big spike up in the gold market, and then some kind of a pullback, but not anything that significant, as we think that gold is going to be in pretty good shape. I'm going to show you that now as you see this dollar, which looks like it fell perfectly from what we were looking for, and with still some room to go on the downside, and we thought it would go to sub 92, and that's certainly where it's headed in here. Now we're going to look at gold. I'm going to look at it in the ETF, looking at GLD. So here's the gold ETF. I'm looking at a 10-year weekly, as you can see right over here. And I don't have any cycle analysis on here. I'm just going to bring that in for you to see. What we're looking at, let me just bring this in right over here, is a weekly chart. And what we have on there is our momentum indicator right over here. And we also have a 13-week and 34-week moving average. Those are our key moving averages that we look at. And we use this momentum indicator to help us have some guides about the cycle conditions. And there are cycles in here that are actually fairly easy to see if you have a trained eye. I'm going to bring that in right now as I bring in the gold cycle analysis. And there it is right over there, as you can see. So what we're looking at are these harmonic families. And that's a 50 bar. It's almost 1 year on average for the dominant or bigger cycle that you see in there. So this is 50 bars right in here. and right in here and right in here. And look at it's ending right in this time frame, and all of a sudden it had a big up move. The minor cycles are averaging about 25 weeks, as you can see right in here, and that is fairly clear when you look at that. So take a little closer look right here at this last cycle, and you could see, and for our members, this is an update and an upgrade, as the pattern does look like it's turned up, as you can see, and we'll be sending you out new charts this weekend to reflect this for GLD, for the gold market, /GC, and for silver and GDX. All of those are coming out this weekend. So what we have here is a very, very likely of a cyclical bottom right over here. You'll note that this chart right over here gave you the 2 cycles coming down, which is normally where you have some declining period and then moving down. Now the momentum indicator turned down and it's still negative. You can see that right over there. It's going to need some upturn in order to confirm this move, but we're looking for a move to new highs out over here, and the projection for GLD would be to equal this high or get a little bit above it by this fib extension up around this 196 area, and then potentially up to 203, up here to 2100 on gold, 210 essentially, and even much higher than that. Our monthly patterns project even higher later out in the year. Remember, we're looking at declines in the dollar very, very likely out into the fall, and that is going to be a good environment for the gold market. So this, you could see how the cycles lay out and how we look at that. I'm going to help you a little bit more to understand these cycles as I bring in the cycle phasing right over here. And what we're looking at are the green phases. In other words, that's where you're in a rising phase. And the best ones are when the 2 cycles are moving up together, as you could see right here. And we have that highlighted with these green arrows. So moving up together, you can see that, you could see that, and you can see that we're coming right into that phase over here. I didn't put those in because we didn't get the upturn in momentum yet. But once that happens, when 2 cycles are pointing up, well, that's right over here. You could see that. That's right over here. You could see that right over here where it turned up. So you get very, very big upward moves. As a matter of fact, this last one had gold moving up over $400 in that last upside impulse, and our members caught that just beautifully. So we're getting into this period now where it's fairly likely this bottom is coming in place. Remember, we're looking for the dollar to fall for about a month. That probably helps this for about a month. And there's some resistances that we put in there, and maybe some places it will stall on the upside and then maybe pull back a little bit, but then we think it will be moving up again. So you could see very clearly when we look at this, all of those very, very nice patterns in there, those beautiful phasing that we're showing you, and a very, very great look at what is likely a coming upside phase in there. You can see those phasing, the colors, the cyclical patterns. You can learn all about how to do this cycle analysis. We have a 20 video module workshop that you can subscribe to, and it's a fantastic investment. We've had so many people learn so much about that. So consider that. Go look at it. We have a free video about it on our website if you look under the cycle analysis workshop. So that is a look at a very, very positive condition for the gold market, inverse to what we just showed you about the dollar market, of course. Let's now switch over, and we're going to look at something else. Whoop, missed that. /BTC. There you go. So we're looking now at the dollar and gold and Bitcoin as we make these comparisons. And now we're going to switch over and look at the Bitcoin market. So I'm going to tell you that I have been negative on Bitcoin. Well, up until just several weeks ago, when the patterns turned so positive, that we went right with it, because that was really the right thing to do. No matter how much I'm positive or negative, I'm always going to give the greatest weight to what we see in these patterns. This is kind of an unusual one, because what we have is 2 out-of-phase cycles in here, and you learn about that in the cycle workshop and about the principle of summation. In other words, the total, when you add in all of these cycle patterns and the directional component that's in there gives you the actual movement in the chart. And you can see what's been going on here is you get the small patterns in here coming down, and it makes triangles because the upside patterns are so strong. The upward directional component swamps it, SWAMP, swamped, because it doesn't allow much of a correction. It did the same thing here that it did right over here, and then exploded to the upside. You can see that upward channel. It actually moved through all of the targets that we had, and this buy zone right over here is in place because of the fib supports between this low and this high. So that's right over here. What this points to are these out of phase cycles coming down fairly soon. It's been following up here this upside of this fib target zone. When we put this fib target zone in here, we never thought it would get through it. And now the upside on this fib target zone is about 16,475, and likely to get up into there before it then does turn down and correct into this area right over here. And we expect that the buy zone will come into play under about 1360 sometime out in December to January. So December to January is that period of risk. When you get these cycles coming down like you see right over here are the greatest risk. That's these yellow phasing that you see right there. And that says to me that, you know, you can make some more upside ground. I wouldn't be surprised to see it up at that 16,475 area and then come down. And then again, the top of that fib extension is up here above 18,000. And that's pretty likely to come out in late winter in February, March. Based on these patterns that we see. So no matter what I think about the cryptocurrency market, with more than 2,000 of them out there and an unlimited supply of what can come, and central banks all wanting to bring out their own digital currencies, the pattern is just very, very positive, and we're going to go with that. And with the potential for dollar collapsing out into the fall of next year, we think that, you know, gold, Bitcoin, silver, they're going to have pretty large upside moves during this period as the Fed is trying to reach inflation, which they're never going to do. I'm going to bring you a book review in the next few weeks of a fantastic book that I'm almost done with, written by Jeff Booth. It's all about the realities of deflation, and that's going to tell a different story out in years out there. But for now, we're just going to focus on what the Fed is trying to do, and the greatest effect will likely be in these inflationary type asset prices, with the dollar likely moving very sharply to the downside. So that is a look at the gold market and the dollar and Bitcoin. And again, for our members, level 3 and 4, you're going to see the revised charts coming out this week that reflect what I showed today on these charts.